After a strong first half of September, equity markets have waded into troubled waters on renewed hawkishness from the US Fed and the simmering India-Canada tensions. The Nifty 50 index has retreated nearly 3% from its all-time high of 20,222 that it touched on September 15. This comes as the India-Canada standoff, which has seen tit-for-tat diplomatic expulsions and suspension of Indian visas for Canadians, has also raised concerns over its impact on the equity markets. Canada-based FPIs held Rs 1.77 trillion worth of Indian financial assets as per the latest data, which makes Canada the seventh largest country for FPI flows into India. 85% of these investments are in the listed equity space, while the remaining is in debt and hybrid instruments. The Canada Pension Plan Investment Board, or CPPIB, which is among the largest global retirement funds, remains the top Canadian investor in India with holdings in over 70 listed firms. At the bourses, stocks that are a part of its portfolio and that of other funds have been on a slippery slope since last Monday when the diplomatic strife first came to light. Shares of Kotak Mahindra Bank, Nykaa, Zomato, Paytm, Piramal Enterprises, Metropolis Health and Mahanagar Gas, among others, have lost up to 5% during this period. Analysts, however, are not too worried as they believe such large global funds are generally focused on driving investor value and look beyond short-term diplomatic shocks.
While there have been ongoing diplomatic tensions between India and Canada, one does not expect it to impact the commercial side and the investment side in the medium to long term. Yes, market participants have been a little concerned with the fallouts. However, we think even if it's the Canadian Pension Plan Investment Board, which is government-owned, is unlikely to sort of wind down the investments in India too much. We think that, organizations like these are led by a team of professionals whose primary focus is to ensure that, their investors make the best returns.
Sharing similar views, Anirudh Garg of Inva Asset PMS believes the India-Canada rift largely remains a temporary turbulence for the equity market. He says, CPPIB and other Canadian entities known for their long-term investment perspective typically do not react hastily to geopolitical events. They maintain a strategic outlook and are likely to wait for developments before making major adjustments to their investments in India. Thus, while markets are expected to remain volatile in the short term, any progress on the geopolitical front could pave the way for a recovery, analysts note. Today, on September 26, the Lal Street action will remain stock-specific and traders will keep an eye out on crude oil prices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.